Hello, hello, welcome to the simulation over here. Let's gonna stop the music. Yeah, so today we're gonna look at how to do a simulation. How to do simulation. So first thing, you gotta come over to your forex. It's called the TetraFX forex simulator over here. Go into the data center and then download the charts for whatever instrument it is that you want to trade. So we're going to be looking at gold over here. And once you got to download it, then you have to update it. Right? So we're going to update it. No new available update data because it's updated until the 21st. It's the 23rd right now. So that's good. So we're going to get all the recent charts, all the price action. Let me see over here. Welcome, guys. I see we got Woods in the chat. What's up, Woods? Shubham's in the chat as well. Bang. What's good, Yost? Man, some of these names so hard to read. Some of these names. Is the simulator free? No. The simulator costs like about $100. But man, if you can't invest $100 in your trading career, then I think you just gotta go and find something else to do because trading is not gonna happen. It's not gonna work because you have to be willing to make some kind of investment in any sort of business, any kind of business that you start. Where that's gonna be educational investment or you gotta need some resources. But yeah, it's $100 over here for those of you who need a good simulator. I think I can really recommend Soft4FX. Yeah, so all right, so look at this. We're gonna go over to new simulation, and then we will have our chart already over here from our last settings. So pip size, we're looking at a one pip spread. Lot size, not so important. Oh, no, the spread is over here. We got about 1 pip spread. Pip size, I think that's a stop loss. It's set at about 10 pips right now. But anyway, that's not important. We're going to start a balance of $5,000. We're going to use a leverage of 1 to 200 risk to reward. And yeah, I think that's about it over here. So we got 1 pip spread, $5,100, 100 leverage. 1 to 100. Now, the next thing that you want to do is you want to go to a random calendar date generator like the one over here. Or just go on Google, random date gen. Boom, boom, boom. I think it's this one. Know how to use that one. All right, cool. So yeah, that's about it. You pick a random date over here. It's going to pick you a random date. So let's put it till like the 28th. We're going to do January up until, since we're in November, we're going to do up until November. And then days of the week, we're going to cancel these boxes because we just want Monday. We want to start a new week over here. Then we're going to hit get dates. All right, so we're going to put this date on. So that's March 17th. So let's go over here. We're going to put March 17th? Wow, what are the odds? It gave me the previous simulations date. All right, so now we got to really shuffle this thing. Let's shuffle. All right, so now we got, all right, let's put that in. Got June 23rd. June 23rd. Nice. June 23rd. Time zone. We're going to use the time zone New York close charts. That's the one that we use. It works pretty well. Yeah, this is what I use. New York close charts. Now we're going to start the simulation. See, updating economic calendar, and what that's updating over there, that's now showing us if you have like any kind of news. So we can look at the news today and then we can see, okay, do we have any news? Got Euro, okay, nothing. We have, FOMC member Bowman speaks. All right, so these are just low impact news events over here. Nothing too important. We got flash manufacturing for GBP and the US dollar. We got euro. Okay, medium. Okay, no, nothing too interesting here. All right, perfect. So let's go over to the day. So now we know that we don't have any news that's going to be affecting the time that we're going to be trading over here. So this is the sessions now. So you're going to click up here and you're going to click on sessions, and it's going to bring this tool right here. So you click right here, sessions, and it's going to bring this tool out. And now we're going to have to go to the pre-London. So that's where, right here, 8 a.m. Let's put the risk. We're going to risk 1% on our first trade as we just kind of like gear up over here and see what's going on. Maybe we're going to start with a 1% risk. What else? Yeah, let's get into it. Let's get into this thing now. That's about it. So let's look at the daily time frame and see what is the daily candlestick here doing for us. First, let's zoom out. Let's see, when was this? All right, so we had the bull rally. This is when we were... Oh, I remember this. I kind of remember this. I think this is when price was kind of like selling off over here. I think that's what was happening from this PA. But that daily candlestick already looks proper bearish right now. As you can see, it's already down by quite a bit over here. It's down 0.95%. Man, 0.95%. And we have just started the day over here. This is not even yet... This is the pre-London. And price has already moved 0.95%. So I'm already kind of looking in my head for sells, for any kind of like nice sell ideas. I can see here on the hourly time frame as well. What do you notice about this hourly candlestick? It still doesn't have a bottom wick. So we know when a candlestick doesn't have a bottom wick, then there's a pretty good probability that that bottom wick over there is going to be formed. Now the only question is, can we actually get an entry? Can we get stuck in here? Let's go on the 30-minute. 30-minute, we have a support, and price is breaking below this previous support right over there. All right, let me just see what's going on here. We got pending orders. What else? Risk, visual mode, stop loss. We're just going to use visual mode for execution, 1% risk. All right, that all looks pretty decent. Yeah, so we're looking at a potential break and a retest over here. And we have about of a range of around a 32.9 pips down towards 33.53. So you can see we already don't have too much analysis on the chart, because we can see that price has created a resistance right over here. And if we break above that resistance, then price has a range to keep moving up towards that next resistance. Right? So we got this range is going to be around 108 pips. 108 pips. But we can see also, if we're going to bring this... Wait, let me see where I can get this. If we get this from this side, there's a range that's currently trying to be filled right now, down towards that next support area. Correct? So that's kind of like what's in motion right here, because we had these really bullish 5-minute candlesticks, and then we push down over here, and if you can see, it's coming back up to retest these previous entries over here. So what I think it is, I think the market just came back to retest, so we can get a possible move towards, you know, the downside over here. So that's what I'm going to be kind of like anticipating, to see if price can keep pushing bearish. So let's see. What are we on here? Let's go on the 5-minute. Let's see what the 5-minute's doing. Got a bit of a head and shoulders here on the 5-minute time frame. Oh, that looks pretty nice. Nice little spike above here. Spike above here. Let's go on the 1-minute. 1 minute's coming down. We don't really got much structure to go off of. right now to take this base off of a 1 minute play. We just do have some kind of rejection there though. Let's see what happens. Candles moving down. All right, so let's kind of refine our zones here a little bit better. Gonna delete this one, and then we're gonna draw a zone right over here. From here to here on the 5 minute time frame, we're looking at roughly about, how many pips is this? Is that 155, or is that about 155 pips towards the downside there? At least some comments. This is perfect. I was battling sleep, trying to stay up till Tottenham play and got this notification. Oh, nice. Yeah, so let's see. Price should come down. Now the question is, how can we get stuck in here? What would be the best way to get stuck in? I think maybe to wait for a candlestick to first close bearish. That could be the play. A bearish closure below support over here. Let's go on the 1 minute. Or take an accumulation breakout. Let's see. Simulation time. Ooh, this thing is just melting. Oh, I don't think it's going to give an entry. Man, it just filled that range. It just filled that whole range. No entry model. So we got the direction. Now the only thing that was missing was a confirmation for an entry. Candlestick has closed like a doji. Let's see. Maybe we can try and get a continuation down over here. Oh, this thing. Holy man, this thing just keeps on bleeding. It just keeps on bleeding, and there's no way to get stuck in here. Price just moves down, but it's good to see that from the higher time frame analysis that we did, that we're right about the direction. Oh my days. Yeah, that thing just completely bled off. It filled up that bigger range. You can see here on the, I think we're looking at the 30-minute time frame. So remember that range we're talking about? Look at how that range has now been filled up all the way down towards that support area right over here. And you know, this is something that we talk about so much during streams, is how these levels are like magnets, right? So you can see how we've been attracted to this level now. You know, we just had a pullback towards that zone. So that's what I was anticipating, a pullback from here to continue to fill this range down towards support. So pullback, that was a nice actually entry confirmation right over here for price to break those candlestick lows to keep pushing down to this support. So you're going to have multiple targets. You have one target down here. We can remove these smaller zones, keep our chart work clean. Since we're not breaking the highs, we don't need anything else above here. So this was like the target, right? You know, price broke below one support, targeting this range. And then once it breaks this range, the idea was price can go to that support level right over there. But you see, in this scenario, we were not able to get stuck in, and price was just distributing. Straight nut, 1, 2, 3. Just a straight nut bearish. So we could not get stuck into this. So what can we do now? What can we do? Are we going to fill FOMO? No, we're not going to fill FOMO, because the next trade is just around the corner over here. So there's no point filling FOMO when market is full of moves. All you got to do is wait. Trust me, you get paid to wait. So we're going to wait over here. We're going to wait, and maybe even see if we get some price action. You get paid to wait. You see, even as price is moving like this, you shouldn't feel any kind of FOMO. All right, so what's going on here? We're creating a resistance. Okay, that's nice. We pull up. Oh, look at this. look at what's happening here. We're forming a consolidation now. We have a support over here and we got a resistance up over here too. And then, man, I think like if I'm going to take a sell, I'm going to take a sell at the break of these lows. And then this is going to look like head and shoulders. So you got head right here. You see that head? Last tap of the highs. This is by 33.56, last tap of the highs. And we also got the fake out situation that just happened over here. And right now I'm looking for more sells. We got about 1 hour before the London session opens, right? 1 hour before London. So that's like very nice pre-London volume that I'm expecting. And we have clean range for price to keep moving down over there. So look at this. We got clean range. This range is around a 264 pips. We got a fake out, head and shoulders, clean range. Now all that we got to do is just wait for our entry confirmations. You know, don't ask me about FVGs or any of that rocket science stuff. All I'm waiting for here is candlestick closes and wick breaks. That's all that I'm waiting for. So I see we have about 1 minute for this candle here to create a resistance. And then I guess the next candle would have to break those lows so we can continue to move, or rather, you know, push down bearish. But now we got to see where's our stop loss, because we see a potential pattern on the 5 minute, or we're visualizing. It's not fully formed yet. We're visualizing the potential pattern, and we can see that if price is to continue moving down, and that was just a retest, we could move down towards 33.49 over here, right? 33.49. So this range is about 54.2 pips. So remember, it's just the same thing that happened here on the 30-minute time frame when price was breaking below this support, and then that was a magnet. You know, it pulled up, retested, and then it came down to continue filling up that range. But now we have to be very cautious about the fact that this higher time frame range has been mopped up and we're heading towards a London session. You know, we might also see some retracements, because this is the move. This range has been filled. If we were still taking trades up here, you could feel more confident for those runners. But since it's already filled, what do we know about targets, chat? Remember what happened last week? Last week when we hit, I think it was about last week when we hit $4,000, or yeah, I think it was about 4K. We hit about $4,000. Remember that psychological mark during stream, and then price just started reversing back up. So you got to be careful about a situation like that too, because this could be like the $4,000, but in this case, it's a range that's been filled up, so the targets have been met. So we're gonna wait and see now if we can at least get stuck in. Right, so let's start our speed here. We're going to put our speed at like 11. See if we can at least get stuck in this position here so that price can move bearish. So I need a break by 33.54 over there. We just got a new 5 minute. Okay, it's breaking the highs. Remember, just like we did on stream for that sell, we can use as confluence if it fakes out. Oh, man, it's still pushing up here. Oh, we just did a nice break to the highs. Let's see what's going on the 5 minute. Damn, it's rejecting. It's rejecting. It's still going up. The consolidation broke towards the upside. Aha, you see? But this was the smoking gun over here. This was point A. This was point A. Now we got distribution, point B. So this range is around, oh, that's actually pushed up about 21 points. Nice. Hey, it pushed up. It pushed up. So at least we found the bus stop. The bus stop was confirmed, but since we were not looking for buys, we missed the buys. And that's okay. You know, sometimes you just got to be okay with missing out on trades. All right, so we just got to be okay with missing out on trades sometimes. Let's go back on the 5. Okay, 5 minutes creating a resistance. Maybe this time it'll actually create a resistance. Let's go back on the 1 minute. Hey, good morning, Kraken. Yeah, that 30 looks like a serious slipper of liquidity. Wow, man, this thing is just moving here without me now. Come on, what's going on? Because I wanted to fill this range. See that range on the 1 minute all the way down towards that 5 minute level? I'm still looking at that clean traffic. So you always gotta like have these levels already printed out in your head. You gotta see it on the higher time frames as much as you're seeing it on lower time frames. Because if we go on the 5 minute, so that's how the 5 minute is gonna look like, right? So currently we're moving down and we're looking to fill some of this range. Maybe get like a small push to the downside. Yeah, so we just gotta wait for some kind of candle close. Okay, here we go. Very good. Let's go on the 5 minute and see what's going on. Oh, liquidity's been taken. Oh, okay, perfect. I think this is gonna be my smoking gun over here. This is gonna be my smoking gun for price. So we see that liquidity has been taken above these highs. Notice that wick. Notice we're starting to break below support right over here. And we want candles to move down bearish. Now, the good thing about this is we got a pretty decent stop here on the 1 minute. Pretty decent stop here on the 1 minute. Let's say about a 19, 20 points. Nice. So just about like where I think price usually can reverse is around like 20 points. Anywhere between the range of like, yeah, from 19, 18, 20 points, somewhere like that. So maybe we're going to aim for like about a 1-to-1 here. First, we need to get a break of the lows. Oh, you kidding me? Up again. What's going on here, Goldie? Wow, man. Price action is super elusive right now. It's been so elusive. What is this? Oh, we're around how many minutes now? 40 minutes until the London session opens. Wondering if we should still take this sell and then still look at that as a liquidity grab right over here. The problem is stop loss is big unless we put like 16 pips. Let's go with 16 pip. I'm going to go with a 16 pip stop loss. Sometimes I'm going to use like 16 pips if I want a tighter stop. Let's go. Let's see if we can get the break. All right. So we just hit a break here. Let's risk 1%. Visual mode. Set a sell over here. Stop, TP, we're going to remove the TP. Stop loss. Oh, wow, look at that. 16 pips right there. Right there. Oh, we should have put the take profit as well. Maybe we should have put the take profit. Let's see. Can we still add it here? Awesome. I'm going to do about a 16 points. Ooh. Pips from entry price. Ah, there we go. About 16 pips. Nice little 1-1 trade. Come on, zero drawdown. Let's go. We already got the fake out. So I wouldn't expect price to pull up right now. Come on, Dampit. You know, we can make around... Oh, let's see. Oh, it's struggling. It's struggling by the entries. We might have to manage our risk if it continues to struggle. Let's see what the 5 minute is doing. Oh, the 5 minute is yeah, we might have to manage our risk. Because what we know about trades like this is they gonna give you a hard time. If it gives you a hard time, it's better to just manage your risk. So what I'm gonna do is, you see, because when I got in over here, I was not expecting that price was gonna consolidate and start to move sideways. If you know much about my trading, you know we love to catch very clean, stress-free moves. So the moment this candles start to give me a hard time like this, I think the best option to do would be, let's leave it for a while and then see if we can create one more resistance point. One more resistance point, and then we're going to reduce our stop loss. Oh, shit. Man, look at how close. Oh, Lee. This is why I say 16 pips. Always so accurate. Look at that. Holy. Man, can we survive it though? Should we get our break even? But I pulled up. It tested resistance. It tested resistance. What should we do, chat? Should we get out? Because you know the thing is, you got a couple of options over here. The moment that price struggles like this and you were not expecting to struggle and it comes back to entries, you can get out of break even and then say, okay, you know, it's fine that you get out here because you're not expecting a struggle. You're expecting a trade to just go in your favor, correct? So you could take the super risk averse approach of getting out at a break even. So let's see what happens here. Maybe we can break some lows. All right, so maybe as we start breaking these lows, how far are we down right now? It's about 8 points, 9 points. Maybe we can just set our stop loss to break even here because, you know, the idea is that price is giving me a hard time. Price is giving me a hard time and, you know, I don't want to fight with the market. We're starting to break lows again. So as we're breaking these lows, price should continue to move down. Man, at this point, if it comes back up, I don't think I want that smoke. Yep, you see how we broke the lows? It should just continue to move down at this point. Because we gave it time, it retraced up and then moved down aggressively with volume. So I don't see a reason why to make that become a losing trade now. So let's see. Oh, okay. I got stopped out here, break even. Yeah, I think that was the best thing that we could have done in this scenario, was just to get out at a break even. So it really shows to you again, like when price struggles, and you can see it struggle a lot with these wicks. Notice you got some wicks over here. Boom, boom, boom. Just don't fight the market. Manage your risk. You know, manage your risk and just keep it moving. Just keep it moving because the London session is about to open up over here. So that London open could be a fake out. So let's see, we got a support. This is garbage. Man, look at the way price is just ranging over here now. So that was my trade for pre-London. So got to break even at pre-London. Let's see what we can do for London open now, as London session is opening up. Okay, price moving down. Not seeing anything too appetizing here. So nothing. Yeah, I think we just picked a really tricky day over there. But we have a consolidation. It looks like it's just about to break. And we got a fake out situation that happened right below here. Right? So we got the accumulation phase has now become this general region because for pre-London time, price just accumulated. So pretty much for this time over here, price was just accumulating. So it was accumulating these orders that we're seeing now, And that's what we're expecting to kind of distribute. Maybe as it breaks above these highs. So I'm going to wait for a candlestick to break above those highs. Then I'm going to look to take a buy position with a 16 pip stop loss again. But remember, we need a solid break. Without solid breaks, then there's no entry. So it came pretty close again, but still didn't give the solid break. We kind of just rejected that area. You see this? Man, this is why it's so important to be patient in trading. You saw just like how my stop loss survived by literally 0.5 pips. And now look at this. The entry has not even triggered. It has not even triggered, and it just broke that wick by 0.3 pips. So you start to realize like how freaking accurate and efficient that the markets are. So you always got to follow your rules. Remember, that's why you got rules. That's why you set yourself rules. So at least you can be just as efficient. So yeah, we got to wait. We got to wait for some candle. Still rejecting. All right, so we're starting to move up here. Let's get ready. Got ready for that break. It's kind of like this. And well, what a beautiful move this was right here. Because this move had that nice range. Look at that nice range. This is all of this. And then it started breaking from this area over here to fill up that range. You see how nice that moved up? That was pretty clean. That was a pretty clean move. Little accumulation break. So that's kind of what we're looking to replicate over here. But you know what? Because the daily time frame is still bearish, let me just be a bit cautious about these buys, because these would be the first buys. This would be the inception. Because you see, for the most part, price today has been moving downwards. That's the market open right there, right? So got a market open gap, and price has been moving downwards. So I want to see if the market can at least show to me that it truly wants to keep moving bullish before anything. Oh, damn, Daniel. Damn, Daniel. 30 points. Maybe I should have taken it. Oh, now we're going to play a victim here. Now I'm going to play a victim. Oh, man, look at that. We planned it out and everything, and we got a beautiful trade. It didn't give you a hard time over here, and it just played out. It just played out. That's how you want your trades to be. You just want them to play out. Because now when you start taking drawdown and price starts giving you a hard time, you know that's no way that a good trade is going to look. You know, a good trade is not going to give you a hard time. But anyway, let's see. We're consolidating here. So there's a couple of things that could happen here at this point now. Price could break these lows and then move down to fill this range, and then that becomes a reversal confirmation. Or it can break these highs so it can continue to move upwards. Now, all I'm going to do is I'm just going to wait and see what direction that the market breaks. I'm going to let the market decide where it wants to go, because the daily is down 0.90%. Heck, we could just keep moving down. This could just be a fade to fade these buyers over here to continue pushing down bearish. Or it could be a continuation for price to continue to move up bullish. Either one of those two things. So we're just going to let the market decide over here. Right now, so moving sideways. We need solid breaks. Remember, chat, we need solid breaks, solid breaks, solid breaks. No entry without no solid break. All right, close bullish, close bearish. All right, let's see. As we're coming here, look at how close we're getting. So we got to be prepared for a potential sell if we break these lows, and a buy if we break these highs. I do kind of like the way the wicks look, because if you notice about the wicks over here, you got 1, 2, 3, 4 wicks. They're kind of looking more like rejections, right? You kind of have more of like a rejection zone right over there. We don't even need to jump onto the 1 minute yet because we can already see the consolidation here on the 5-minute time frame. All right, so we got a couple rejection wicks. Damn, this is the longest I've ever taken on a simulation to actually take a trade. But we just gotta be patient. I kind of hesitated on a bit of those. So let me wait. Now this is my opportunity. I'm gonna be like that lion in the wilderness who's not gonna just keep watching the gazelles run by. You know, we're just watching the gazelles run by over here. Now this is my opportunity. This gazelle, I'm catching this gazelle. This is my gazelle now. So let's see. If we break those highs, I'm gonna be getting stuck in. No more watching. No more what ifs. No more second guessing. Man, and these are the trades that I love. This trades where it's like, it's so straightforward and you don't even have to think. It's so straightforward, these trades. These are my favorite type of trades. So simple. It would be a sin not to take this. All right, we broke the highs over there. So as we're breaking the highs, I like the idea of this trade. So I'm going to risk 2%. I'm going to risk 2% on this position. Because now we've rejected the lows. We can see the market itself didn't break the lows. So why would I still be looking for sells when the market itself is telling me that it didn't break the lows? Why? Why would we look for a sell? I got to look for a buy right over here. Nice. Very good. Very good. Oh, Lee. Man, look at this beautiful distribution. Damn, 20 pips. 20 pips over here. Yeah, we gotta secure something. We gotta secure something on this trade. So I'm gonna go over here and I'm gonna modify my position and I'm gonna close. Actually, I'm gonna close full. I'm going to close full of my position over here. So we just made around $115 on a $5,000 account. Not bad. Not bad. $100. $100. Not bad at all. And all we had to do was wait. TFX concepts. Beautiful entry. Little accumulation. Little breakout. Now, I think what's going to happen is we're going to be heading towards... oh, we gotta pause this over here. Man, that was an amazing trade. Straight profit. Now we gotta go over to, I think this is gonna be pre-New York. Yeah, I think this is gonna be pre-New York time. So at this point, you know what the best thing to do is? The best thing to do, because we really worked for this trade. You know how much time that we killed over here? We really worked for this trade, so we're just gonna wait. Oh, man. Should have maybe secured like a partial. But anyway, we can't say that in hindsight. Doesn't work like that. So we just jumped into pre-New York now. This is 2 hours before the NY session's about to open up over here. Let me see if we can catch another simple one. I gotta zoom in a bit more. What's going on here? All right, so if we create a support there, that could be interesting. All right, let's see. Dipping below. Okay, I see it forming. I see something forming. Do you see it forming, guys? Write in the chat. Put a 1 if you see it forming. Put a 1 in the chat if you see it forming. Or put a 2 if you're still confused about what's going on here. I see it forming. Oh man, I see this thing forming real nice over here. Real nice. Let's see if how candle is gonna close. All right, we just created a support there. Okay, awesome. Yeah, this is gonna be a piece of cake. This is, man. You know, like here's the thing about trading. Here's the thing about trading. It's if you let the chart come to you, you get the best trades. But if you're gonna force trades, if you're gonna say, oh, you know, it's Monday now, it's Monday and I gotta trade because it's Monday and because I'm on the chart right now, that's when you're gonna lose a lot of trades. You know, when I was scaling my account, I just waited for the best possible setups that looked like this. These were the trades that I was taking because I was taking big risk on those trades. So I was like, okay, so this trade needs to feel as natural as it can possibly feel. This trade needs to feel that natural that you're not forcing, you can see it. Those are the best trades, man. Sometimes we have like these London session streams and we literally see it as we're coming onto stream, and sometimes we execute right when stream starts because it's just there. It's just there waiting for you. So we're going to see if we can get some kind of a confirmation here. We need to see price break above these highs. I don't know why a MetaTrader can't let me go up there. It's like there's a ceiling over there. I can't like drag myself a bit higher up. But we need those highs to break. It's flirting with it. All right, before we break those highs, let's just look at the other time frames. Let's see what's going on here. Now, oh my days. Runners galore right here, boys. Runners galore. You have a resistance by 33.76. The 15-minute is accumulating. And when price does this, man, you know what it's thinking? It's thinking, I'm getting orders so I can make my next jump. So this is the next jump that price has to make here. This is going to be around 77.3%. So if you're in the TFX community, you got to go on the WAP database and watch those previous simulations, because this is something that we talk about a lot when it comes to how to catch runners, right? How to give yourself a probability of catching runners. And that's how we secured, I closed around 5% on, when was it, on Friday? On Friday, it was like a 5% trade. We had beautiful range to the downside, and this is like a similar idea over here. So you must go on the WAP database, on a super secret special database there, and then you're going to understand what's going on here. So we're going to wait for a break of these highs by 33.68. Still waiting for my confirmation. We just need a solid break. Might go with a 16 pip stop on this. I told you, chat, 16 pips, just like the other trade we took. If you want, oh, there it goes. There it goes. If you want a tight stop loss with these entry models, 16 pips works pretty good. Pretty good. So we're going to do that again. So we're going to take another buy over here and then reduce our stop loss to being about 16 pips. Now you see the differences here, that as I'm going into this trade, I see where price can head on the 15-minute, and come on, like if you look at a range like this and you look at the way price is gearing up right now, what's the probability that price keeps moving up after creating a support like this? Look at the way it's been rejecting here. You got 1 wick, a higher low, higher low, higher low, accumulating, breaking these previous highs. It clearly doesn't want to go down. I would say there's a higher chance that price is going to keep moving up to fill that range, right? It's going to fill this range. There's a higher chance just looking at the way price is right now. Okay, so we're trading what we see, not what we feel. If you feel that it could be like a fake out, then, that's something else. That's something else, but you just got to stick to your plans. Right? So I'm seeing that price is breaking above these highs over here. I'm seeing that price is breaking these highs and we have clean traffic. And remember, we're going to manage risk the way we managed on our first trade. The moment it gives us a hard time, we got to look to manage risk. Oh, beautiful. Zero drawdown, baby. Come on now. Stop playing with me. TFX concepts. TFX concepts. How much are we up right now? TFX concepts. About 16 pips. We haven't yet hit 20 pips. We got to hit 20 pips and then stop loss to break even. This is how we deliver zero drawdown entries on stream when we do this live Monday to Friday. This is how. This is exactly how. You do your simulation on the weekend and you come on the charts when it's live conditions and you do the same thing. The only difference, the patience changes because now you can't like fast forward candles. So you have to be okay with waiting. Because man, if you're not okay with waiting, then you can't trade. Because trading is all a game about waiting. You see, 20 pips. We haven't hit 20 pips. Too soon for break even. Unless like, as a 16 pip stop loss is not bad as a little scalp though. Having that 16 pip stop loss could have been an in and out little situation there. All right, so okay, you know what I'm gonna do? I don't want to take the smoke. I'm gonna put my stop loss to break even here, since we're getting pretty close to. Oh, nice. All right, so let me see what the 15-minute here is doing. Oh, Lee, yeah, look at this, perfect. 15-minute candle here is about to. Actually, the 15-minute candle here is about to close in 40 seconds. So when it closes, I'm going to secure 80% because sometimes this is a trick that I like to do sometimes is when I see that the candle is about to close, sometimes the candle is going to give you like one last push. You know, one last push up before it closes and then you secure your position as the next one is opening up. That's a trick that I like to do. We got 30 seconds. Look, let's see if we get it. There for 950. All right, that's yeah, exactly. About 57. Look, we're about to get the new 15-minute candle. So what I would do here usually is close around, let's say, okay, we can close on this trade because we want to leave a runner, 80%. And look at this. Then even if you waited just a bit longer. Oh, my bad. That was a new 5-minute. I think that opened, not the 15. That was a new 5-minute. So scoped out the 5-minute candle. So see where my exit was here on the 5-minute? Right at the highs. Right at the highs. But it looks like price is still running up over here. So you know the beautiful thing is whenever you're going to get like a winning trade, winning trades are usually attracted to magnets, right? These magnets right over here, like levels like this that we have by 33.76. Just the same exact way we explained how this, remember how we explained in the beginning of the simulation? How this was also like a magnet for price from here to here. See that on that wick? And then from here to here. See this? From here to here. And then now from here to up there. Simple. That's it. That's all that it is. So we're just going to let this thing run over here. We're going to let this thing run. Let's go on the 5-minute time frame again. We're going to go on the 5-minute time frame and then I'm going to now modify my trade and then scale my position. And then see if price can keep pushing up over here. Or wait. This might be too soon because I already secured a partial there. So I want to see it run. I don't want to get stopped out where I secured a partial. So we gotta wait. When we re-break these highs, that's when I think would be safer idea to trail those lows. Because that candle didn't even have a bottom wick. Man, look at this. This is just a simulation where we're risking 2% a trade on a $5,000 account and I'm up about $300 right now on 2 trades. Not over risking, not over trading, just, executing. Executing with discipline and patience. We're up about $300 right now. $300 on a $5,000 account. I think that's pretty good. So what I'm going to do is, because I don't want to be greedy here, as price pushes up, I'm going to close the rest of my position right over there. So we're up about 6%. Remember, not over risking. This is not over risking. This is not over trading. We're using good risk management and we made about $320 right now. All right. So price is going to go up. Let's see, as price goes up here, it's going to fill this range. You see, it's already filled that range. Oh, wow. Look at that. That was by accident. I promise I did not plan for this. Actually, I think I should have, but I didn't. If I knew the 15-minute was about to close, I would have done the same thing and explained it to you like I did on the 5-minute. But I think that's what happened over here. The 15-minute candle was about to close, and as the candle was closing, I secured something, just like we explained on the 5-minute time frame. And the range has now been filled. That's about a 76.9 pip range. Not bad. Really, not bad. So what are we going to do at this point? Are we going to take another trade? I need some help in the chat. Are we going to take another trade, or are we going to go to the next day? What do we do? Another trade or go to the next day? Man, this thing is still running here. Look at the way price is just running right now. Next day, next day. Yeah, let's go to the next day. Because you don't want to overtrade, you don't want to over risk. Oh, damn, Daniel. This would have been, if you said another trade, we could have caught this move. If you said another trade. This was 91 pip range. Look at this. Man, you can't make this up. Man, I wish I could make this up. That's why I said when you're going to become profitable in trading, it's going to feel illegal. I thought it was illegal to trade when I started becoming profitable. Because look at this. What happened over here? What happened over here? Same exact thing we've been talking about. Area has been mirrored, mopped up, just like how that 15-minute range got mopped up. Look at what price did over here too. Just mopped up this whole section like this. All right, but fine. Let's just go to the next day. Gonna jump over here onto the next day. All right, so let's see. 1 minute time frame. Oh, awesome. Amazing. Amazing. I didn't even have to do any work over here. I know what I'm gonna do. Entry at the break of the lows. But let me see what the daily time frame is doing. Daily is also moving down right now. So I'm going to take a sell as price comes and breaks those lows because the daily time frame is down 0.57%. So if you're going to use a free TFX indicator, the daily bias in the description box, it probably tell you right now is going to be a bearish bias to sell. If you want to get a running trade, you're going to have a higher probability that your running trade is going to be a bearish sell or sell, basically. It's going to say bearish. All right. So remember, you see what happened again. Look at this. Look at what's happened here again. That's why you have to wait for a wick to break. You got to wait for the wicks to break. Markets are super efficient, and that's why you have rules. Your rules are to keep you as efficient as the market, you know? If you're going to be emotional about your positions, then you can't be as efficient as the market. All right, let's wait for another break. So we're up about $300 over here. Man, that would be awesome. $5,000 account, $300. I would actually like really withdraw that money if I was still trying to like scale this account and just enjoy the first bit of profit before really locking in. Use that $300, you know, you gotta take your wife out to dinner, your girlfriend, or, you know, you can buy yourself something nice. Just kind of reward yourself before locking in again. All right, so let's see over here. I'm trying to get this break. It's really hesitating on the break. Well, locking in, because at this point, once you lock in like this, you're gonna scale that account and you're gonna increase your risk as the account is growing and decrease your risk if you're in a losing streak. All right, so let's see. Oh man, it is flirting with 33.47. It's literally, oh, there it is. Okay, perfect. Yeah, there we go. All right, so we're gonna take another sell. Hey guys, we're just gonna risk 2%. We're just going to risk 2% on this, on these trades. Another 2% trade. We're going to use 16, the super secret 16 stop loss. But even now, we don't have to use 16. We can just put it here at about 15. All right, that's really nitpicking. See, 15.87. Just about 1 pip above resistance. Can't open the stream, just says stream failed to start. Really? We got some people in here. Let me just try stop stream and then share stream again. Try again. Yeah, just try again. Stream should be working here. All right, so yeah, took a sell. Let's remove that. Let's look at the 15-minute. Oh, kind of selling into a support area. So just got to be cautious about this on the 15, the 30, actually looking quite choppy over there. So since this trade is not as clean as the other trade, remember the trade where we caught the running position? It's not as clean. It looks a bit different. This time we have a support area right over here. And we got a wick fill situation down over there. So I'm just going to be really anticipating that we can keep moving down. But what we got to do next is look at why even price is moving down so heavy right now. Let's see if there's anything on the news. Canadian dollar, USD, Euro, US dollar. No, it doesn't look like we have anything over here. Yeah, that is fine. We're just going to manage our risk in drawdown if it gives us... Remember what we said, Chad. Like, your trade should not give you a hard time. Oh, shit. Look at this. Okay, that's only 11 pips. Man, it looks so crazy. That looks like such a crazy move. It's only 11 pips. All right, wait. Beautiful. Holy. 20 pips. All right, I'm putting my stop loss here to break even. And then I'm going to secure 80% of this trade and then just let the rest run. Holy man, I did not expect this candle. Look at the size of this thing. It's like 35 pips. Stop loss to break even here. Man, I did not expect that candlestick. All right, what are we going to secure then? We're like 40 pips. Damn, Daniel. Back again. Back again with the white Vans. Yeah, I don't think it makes sense to hold this trade. I'm just going to secure the rest of my position here because there's no range. There's no clean traffic. If you look on the left-hand side, look at where we're selling to. We have a support area over here. So there's a lot of wishful thinking that price can actually break these lows. It's not as straightforward as the previous trade was. But let's just see what would have happened. Damn, Daniel, still moving down. Holy. All right, awesome. I think that was a good trade. I think that was a good trade. There's no need to loiter around here anymore. We can just go over to the next day. Oh, wait, we gotta go previous right here. Yeah, let's not loiter around anymore. Let's just go over to the next day. We're up about $400 right now. About 9%. Risking 2% per trade. So again, remember, we're using good risk management and we're still looking to reduce our risk. Even with a 2% risk, I'm still looking to see, all right, so if I'm going to get a losing trade, how can I make that losing trade less? You know, because that loss is around the corner. So the moment a trade gives you a hard time, you want to be out of the trade. You do not want to force trades to play out in your favor, because those will not be the best trades that you're going to take. Right? Those are usually going to be your losing trades, if anything. So let's just continue now. Let's continue now. It looks like it's creating some kind of an accumulation. I think this is a pretty straightforward one here too. Go on the 1 minute time frame. See, it broke. Like there was this little one here. This one actually got faked out. You had one fake out below here, but it was a decent push. Before it faked you out, it gave you about like roughly, okay, not too much. That was about 7 pips. It broke the highs. Kind of looked like it faked out quite a bit actually after breaking those highs. But what I'm looking for is just like a little bit of confirmation, some confluence here. Let's see, anything on the 15 minute. What I can say is if price moves up, let's look at the daily. The daily time frame right now is bullish. We're up around 0.14%. So not crazy bullish. And what I can say is this wick looks very suspicious over here. You can't teach all the fish in the sea in one day. Oh, you can't catch all the fish. Yes. Just because it's an all-you-can-eat buffet doesn't mean we should eat all day. Yes. Next day, let's be disciplined. We already had enough today. Yes, true. That's why we're just going to focus on one trade now. Let's do one trade now. All right, let's see. We have a wick over here by these highs to break. And we have a potential liquidity grab down over there. You can see that wick looks kind of suspicious, right? Kind of suspicious. And at the same time, you have really nice clean range up towards that high. You got a support, suspicious looking wick, clean range. Again, it's like a magnet. You know, this is going to be like 20 pips. You got 20 pips up towards 33, 31 over there. And I see we got a rejection. We got a bit of confluence. So we got a rejection wick. Boom. Now we just have to see what price does. 5 minutes. Accumulating orders right over here. See, kind of like sticks out. It's like a sore thumb over there. And then we have resistance over here. So I'm going to wait and see. Maybe if we break this wick, that price can go up. Let's see. What wick? Or we can take it based off of this area here. Wait. Let's remove this. Because there's no point waiting that long if we have another situation here. Would be nice for some more candlesticks to close bearish though first. Let's see if we break that high. The wick to the lows is a pretty long wick, so for sells, we could be looking at a region like this. If that creates a support now, and then the next candlestick breaks the lows, then we can look for a sell. Oh, you see it's not breaking the lows. It's on the 1 minute time frame. It's still trying to push up over here, but let's see. Let's wait. You only see the crumbs when the cookie crumbles. Oh, all right. Pushed up quite fast over there. I'm going to have to go back because with the simulation over here, the speed is a bit high. I'm going to have to go back and wait for the break. But that already looked like a nice break. Was it this candle? And we're going to speed it up a bit. Oh, shit. That was a strong break. That was a strong break. Maybe we'll pull it down a bit more. All right. Yeah, let's take a buy here. Let's take a buy here. and then put our stop loss below support. This is about 15 point, let's say 15.3, 15.6 pips below support. So just about 1 pip below the support area over there. Right? So let's see. Remember, if it gives us drawdown, it's not a good trade. If it gives us drawdown, it is not a good idea to hold for so long. So you gotta then wait for structure to first build. Boom, boom, and then break some highs, or at least get some structure first build, and then reduce your stop loss. So this is always the first stage, you know, getting stuck in. Now we're in, so now we gotta think about how can we lose less. And then the profits, if it's a profitable trade, it's just gonna take care of itself. All right, let's see. We have about 16 points is gonna be just about these highs. If price can get up there. Oh, it's struggling. It's not giving us the same vibes as the other trades. Oh, you see this? Now we need a support in drawdown. Then we need some kind of a support to be formed. Let's see what the 5-minute is saying. Got a 5-minute resistance. We got one support in drawdown. According to the WAP database, we're gonna need some more structure. Let's see. All right, so what I'm going to do is I'm going to move my stop loss here a bit more. I'm going to reduce my risk because you see this is now giving me signs that this can be a losing trade. So I don't want to be involved in a trade like this when it's going to give me a hard time like this. So I'm going to reduce my stop loss around, let's say 33.28, just about a point below here. So worst case scenario, we're going to lose, instead of 16 pips, we can lose 16.5. We can lose 8 pips. Not bad. Not bad. But it cannot break that low. That's a really important low. Coming really close to it though. Can we survive? Oh man, this is an awesome situation because this is what I usually call a shield. When the candlestick creates a long wick like this, and then we end up creating a support like this, and then that kind of creates like a shield, right? You see that kind of how it bottoms out over here, like that. It kind of creates a shield. So this is a pretty good situation to see yourself in. And remember, this is all just reading organic price action. That's all that we're doing here. Is that we've learned how to ride the bike without any tricycles. That we can just read price. It's all price action. Okay, let's see. Is it going to hold? Man, this is so close. This is so close. Can we hold it? Hodl. Oh man, this is awesome. Wait. This is an awesome opportunity for me to show you how to scale into a position. Because we've managed our risk. There's a re-entry right over here. A re-entry right over here. You can see the accumulation, correct? You can see the accumulation. Our re-entry is still at entries. And what it is, since we've reduced risk on the first trade, this is really nice. Because now we can take this next trade. And, you know, if it becomes a losing trade, it wouldn't be so bad. But for this next trade, I'm going to risk... how much should we risk on the scale-in, chat? Let me see. How much should we risk on the scale-in? Let me get some help over here. Because we've taken off like... We've taken off a bit of risk on the first one. 1%? Yeah, let's do 1%. I like that idea. Let's do 0.75. Yeah, I think 1% makes the most. It's aggressive, but since we've taken off risk, we can put back a little bit of risk. So, you know that 0.75 you said, Kraken? It kind of balances out now because we already took off risk, right? So let's just go with 1% then. Oh, there it is. That's the entry right there. It spiked. It spiked the entry. Oh, there it is. All right, so we're going to take a buy over here. We're going to take a buy and we're going to put our stop loss where our reduced risk stop loss is because we've seen the continuation confirmation signal. This is a continuation confirmation signal for price to keep moving. Oh, and we have clean range. Man, this is just getting better and better now. And we have clean range towards a 33, 31 over here. And we have clean range. Let's see on the 5-minute how this looks. Oh, man, that's a really big... Is it really that zone? Where is that zone? Oh, here it is. Yeah, so we got some clean range up towards that 15-minute resistance over here. We got another resistance that we have to watch right over here too. Okay. All right, so price progressing beautifully. And as we approach this resistance, I think it's a good idea to secure... Or is it still a bit too early? Oh, we gotta hold. There's our entries right here. Stop is down here, 8.3 pips. Let's do 16 pips. So we're gonna set like basically like a 1-to-1. This is a 1-to-1 right over here. 16 pips. Let me see. Can we modify some of these trades? Okay, set a take profit. Auto BE. Modify. All right, so we're just gonna close as we come up there. See, the 5-minute has now closed above resistance. I believe on the broker it looks a bit weird, right? But if you're on TradingView and FXCM or whatever, this would actually be a closure above resistance. So since we've already had a candlestick here close above resistance, what I'm going to do is I'm going to really manage my risk on these two trades and put my stop losses now to break even. Because now I'm expecting that price can just keep moving up. Right? Now I'm expecting price can just keep moving up because we close above that resistance. Can we get this TP? Can we get this take profit over here? Come on, Goldie. Give us 33.30. Come on, 33.30. Oh, all right. So I'm securing my profit here now. Man, awesome simulation. Awesome simulation. I think that last trade was a very once in a while opportunity. You don't gonna get these opportunities every day. You're not gonna get those scaling opportunities every day. So we had to take that opportunity when we saw that opportunity. And now you see price, just as we spoke about, that level over here on the 15-minute time frame, that's like a magnet, right? That's a magnet. Now remember, we risked 2% per trade for each one of these trades, right? And we secured partials, we left runners, we managed our risk on the trades, which are going to give us a hard time by, you know, first of all, preempting it. So you're always expecting if your trade's going to give you a hard time, you're thinking, how am I going to reduce my stop loss? So we covered how to reduce a stop loss by waiting for structure. when it makes sense to be going to break even once you have price retrace and then re-break wick highs. Securing partials, using clean ranges as confluence for runners, looking at the higher time frames, refining down to the 1 minute time frames for accumulation breakouts, the importance of a 16 pip stop loss, and we've seen the accuracy of those 16 pip stop losses when we nearly got hit by literally 0.5 pips. And man, that's it. That's it. I think this is one of the best educational simulations that you're gonna get here on YouTube. That's it. We made $669 with a $5,000 account, and it is, what day is this over here? What day is it of the week? Is that a Thursday now? We're heading towards the end of the week. I think this should be towards the end of the week now. So yeah, that's it. That is it. And I will see you all next week. Let's slaughter the markets. TFX concepts. Take care, everybody. And adios.
No time for the slip, homie. Now we bout to dip.